Welcome to iVSAchart Analytics, your best signals stock market indicators. iVSAchart Indicators is based on the time-proven Wyckoff-Williams volume spread analysis. It tells you when you should be in and when you should stay out. No more second guessing. It features a stock screener that allows you to follow the smart money. You virtually get in before the public does. Profit with the smart money. Simple, accurate, and available on desktop and mobile devices. Test drive our iVSAchart now.
Good morning. Hello, everybody. Just want to do a sound check, please. Can you hear me? All right. Just want to do a sound check. Can you hear me? Okay, there are a few more coming in there. All right. All right. This is Martin here with Bill as a guest speaker in our Friday iVSAchart clinic dating for the 26th of September. Bill is with me here today, and we are doing here from Kuala Lumpur, and a couple of announcements in here before Bill will give you a sort of a roundup, and we'll be looking at also, can you see the screen now? Our new flyer. Can you see the screen now? Our new flyer here. Can you see it? Just type yes if you can see it, okay? That's our iVSAchart new flyer screen here, and we will be doing a mini workshop as well as our preview to our main course on the 19th October. More about that later. Also, another activity is we'll be for our pro users. We'll be doing a meeting on October 2nd. Pro users on October 2nd. The webinar will be sent out soon. Some of you who is listening now are the pro beta users group. So I just want to inform you what are the new feature development that is coming up, and also get feedback from you. Okay, very important feedback. These are the selected group who volunteer. I know Mr. Wan, you're one of them. Thank you for your kind feedback so far. These are the so-called the early pioneer of the iVSA Pro users, and now remember, the iVSA Pro users is definitely for all of you, those of you, because we have our own development team, our coders, and we are taking your feedback and your requests to do things we think which is possible within the first release of the iVSA Pro. So this is your system, and if you want to participate, let me know. I can add you in, but you must have some experience with the iVSAchart, and definitely coming to the workshop on the 19th. I'm sorry, on the 19th October, our short workshop, how to read chart like expert seeking the next 100% return. That's the one we are talking about on. Which is happening on 19th of October. Are you getting this? All right. I will put this flyer up there, okay, shortly. Meanwhile, we can get Bill to talk. Can you see about the flyer, okay? So I just want to do an early promotion in here. This is an early promotion for our iVSA. Can you see it, please? All right. Okay, good. All right. And now I will get Bill to, I will also send you the brochure now. I'll get Bill to talk about his outlook. All right. And then, all right, Bill, you go ahead, Bill. Bill, you there, Bill? Bill? All right, Bill, you can talk now, Bill. All right, go ahead.
Okay, so, all right, so good morning, everybody. And thank you for coming to our program this morning. I have a few things to share with you. And this is a question that I get all the time, so I think it's something that may be of benefit to you.
Bill, you there, Bill?
Yeah. Okay, so, all right, so good morning, everybody. And thank you for coming to our program this morning. I have a few things to share with you. And this is a question that I get all the time, so I think it's something that may be of benefit to you. Are we in a bullish or bearish environment? And how do we look going forward? So I'm going to try to address this question and hopefully can give you some insight. So first thing I want to look at is how far are we from pre-crisis highs? For example, U.S. has exceeded the pre-crisis 2009 high by 20%. Japan, however, is down 16%. Indonesia, however, is up 81%. The KLSE is up 22%, and the Singapore STI is down 13%. So some of these markets have not moved that much, and in my opinion, have more room to move, have more potential. Others are a bit overpriced. Indonesia is one of them. Now let us look at the background. What is the rationale for being invested or not? Okay, number one, U.S. market is definitely driving the whole world. And some of the reasons the U.S. is doing quite well is unemployment has fallen. Now unemployment is lower than when it was before the crisis hit in 2009. Economy is improving. The Case-Shiller, which is the index which measures house prices, again has exceeded the pre-crisis levels. Consumer confidence is recovering. In 2009, consumer confidence was only 30%. As of a few days ago, it was at the 73%. So consumers are getting more confident. They're spending more money. Now let's move over to the Eurozone, which is the world's second largest economy. And just last week, they had a G20 meeting of the 20 of the world's leading finance ministers and central bankers. And the overall message was that they are going to re-liquefy the EU, and they're going to have quantitative easing and lower rates. So the Europe thing, the worst is over, but its recovery has been very mild. So to prevent the thing to go back into a double or triple dip recession, all of the big guns are agreed to print more money, re-liquefy, and increase growth. So to back that up, bond yields in Europe have been falling. Germany, Belgium, Spain, and Italy, now the yields are lower than pre-crisis. So that means there's a lot less fear of a sovereign default. And the other issue is, looking at markets in Europe and the US and the world, in fact, volatility is at decade lows. And that means risk levels are up. So, and that means that's one which is actually a bearish point. There's a lot of complacency in the market. Well, going back to the EU and the US, as they continue to recover, this will definitely benefit export-related stocks. And this is what we're buying now for some of our clients, export-related. Valuation-wise, emerging markets are very attractive compared to developed markets. For example, the forward PE for developed markets now is 15.3. Asia is only 11.8. So that means Asia has a lot more room to grow rather than in the US and Europe. So what we're going to see is, if we see a continued strong performance in developed markets, one day foreign funds will return to emerging markets, as they have always done in the past. Sentiment levels are extraordinarily negative towards developing markets like Singapore, like Thailand, Malaysia, and so on. But sentiment swings, they can turn. And at some point they will. The US dollar is reaching a multi-year high. However, it's now reaching, I believe, a triple top. Volume is definitely high, but yet there is no forward progress. And as we teach in our VSA course, this is a sign that we're going to have a correction in the US dollar, meaning professionals are not buying the highs. The next question I had that some people ask me, is Malaysia expensive compared to other developing markets? Well, based on volatility, based on the low beta compared to other markets, the KLSE is still very attractive. And plus, Malaysia has a much better, well-diversified economic structure, means the economy is more stable, and the foreign debt ratings are the highest of all of the Asian countries except for Singapore. Malaysia far outpaces the stability of Thailand, Indonesia, Philippines. So when the region recovers, Malaysia will recover. And also, it does provide some support. And also, we have very low interest rates, and they support the market. So if you compare interest rates based on valuations, it means that the PEs in Malaysia are well supported based on interest rates. And based on research on the Bloomberg, It shows a potential PE for Malaysia, and this is unbelievable, is 33 times, which is much, much higher than what it really is now. So based on that, I think there's opportunity in Malaysia if we're careful. In Singapore has more room to grow. So don't give up. Don't get scared by all the negative propaganda on the Bloomberg, CNBC, and the media of how wonderful is the U.S. and the UK and Europe compared to Asia. Money will come back. Growth will come back. So I will share a little story with you that talks a little bit about growth. Ultimately, what pushes up the market is earnings per share growth. That is the reason we buy shares, to get the share of earnings. And where is the growth? Where are the earnings? Well, I can give a little example. One of our clients, he has a construction business in Kuching. Very active property developer, businessman. And when my brother visited about 3 years ago from the U.S., my brother, by the way, he's a fireproof contractor, and that means that they use for a building to be constructed, a high-rise tower, it has a metal structure, but this metal structure has to be insulated with asbestos, so if there's a fire, the building won't just melt and collapse. So in any case, my brother sold the business, and he was talking with this guy who does the same business in Kuching, and they were talking, and the guy and my brother said, they can do things I cannot do in Malaysia, meaning they have all of the wrong protection laws, work compensation laws, the wealth it has to pay, the business taxes, and super regulation about how many minorities they're forced to hire. There's none of that. And it's much easier to do business in Asia from Europe and the East, which has very high tax structures, is very on towards business. They try to take from this and realize that this is what creates jobs, creates. So still has that advantage. Still has advantage. Both average growth as well by growth in the U.S. Despite all of the things that are wonderful about the economy, low unemployment, and so on, growth is still very low. And we doubt, according to the World Bank, it doesn't look like it'll go more than 2%, and Europe is just about 1%. So Asia is still the place to be, but because of so much negative sentiment and so much fear and panic by the small guys, that is why there's still opportunity here. So still we have to focus on Asia. That's where the money is. That's where the growth is. But just hold steady. Don't panic. Don't get caught up in the fear. If you're holding quality shares with good growth, good earnings, relatively lower PEs, Asia is still the place to be. And having said that, do consider to come to our upcoming VSA. We've added a lot of things to the course, and those who are graduates can come, and you only have to pay a small fee to that. And the preview that's coming up, if you have time, do come by, and hopefully you guys can create another source of income for yourselves. And there is opportunity here. And you will see, even with all the extreme negative sentiment, if you run your filters, you'll always find something that has an edge or probability in your favor. So come and see us and learn how to do that. And having said that, I wish you a great week ahead, and don't get caught up in all the negativity. Goodbye.
All right, thanks a lot, Bill. There was some breakdown on, okay, just hang on a minute. I'll get back on the air. Okay. There was some breakdown on the audio, so you can pick it up perhaps on the recording. Okay, let's go on to our regular program. Bill talked about not being afraid of the market, but there were also a couple of questions did ask on me. On the Dow Jones, this is from Wing Folk. They asked me about with VSHR, do we still need to read books? I'm going to answer you yes. The question is, do you still need to read books? Of course. This is a question from Peter. I would answer it definitely. It's all about education. Okay. If you have computers, do you still need to use books to read ebooks? Right. So the answer is definitely yes. The better we know about the market, it's an on ever going thing. Now the question about the US Dow Jones, I will show you on the chart now, about whether was this an upthrust that happened with ultra high volume. Definitely the answer is yes. I will show you now here. Right. So we are seeing weakness now. I do believe the Dow Jones is going to head for a correction now. This is what I'm talking about here. This chart here, can you see this? This upthrust with a high volume mark there. Can you all see this? All right. Let me know if you can see this. Just type yes, please. So that is the concern we are talking about. So that was immediately subsequently, we have the unconfirmed upthrust. Then we got another 2-bar reversal. There was 2-bar reversal to the top side, but market couldn't break back to 1720. Market continued to reverse back down. So we are seeing the breakdown below the 50-day moving average. If that happens, 1600, this may look like a correction, at least another 5% correction from here onwards for the Dow Jones. Okay. For the KLSC, I'm sure you're going to be asking me. I will give you a full thorough report on our Friday closing bell this evening at 4:15. So if you're not a member, do consider to become a member of our premium membership, where you get a better informed, and also from terms of price and volume. Okay. And one way to do that is also come to our main course, which is happening on November 15 to 17, and then you will get a 3-month membership to that. Okay, upthrust is a bad sign. Upthrust is a sign of weakness. Okay, upthrust is a sign of weakness. Okay, so make sure, Peter, you come to our main course, and then you all will be reviewed. Okay, because you just know you haven't come to our main course, so you know a bit here and a bit there. So it would be great that you can come to that one. Okay, it's about investing in time. All right, next thing I have here is there was a question asked by Mr. Wan on Sam Darby. I will get to Sam Darby, take a look at that one, which is about the upthrust on the 8th of July, whether I was classifying that or not. Okay, I'll come to that one. So next one that we have is the iVSA Pro Beta User Group meeting will be on October 2nd, 8:30 p.m. So these are the user group that I'll be briefing up some of the new features and what are things that we've done of, and help to make this software of choice for all our iVSA trader in the coming weeks to come. And this is something that they could use to manage their own portfolio. At the end of the day, if you have funds, you need tools, and definitely we are recommending the iVSAchart Pro, and definitely that's one way to moving up. On the next on our agenda is the workshop that we have here. Let me just see if I can get that. Is already up. Yeah, I will send you the link after this. Right. On the 19th of October, we mainly do a lot of our session these days on the webinar, but we like to do one on the 19th October on the Sunday. Okay, that will be a Sunday. Let me just write that down. On the 19th October in UAM Convention Center in PJ. I will give you so to cover our cost, we are giving a book of Get Rich with Dividend, a fee of 39 ringgit, and you will get a light refreshment that month. We have 2 sessions, 9:30 to 12:30, and afternoon session will be 2 o'clock to 5:30. The information will be on the brochure, so I will send to you now. You can download it. Just give me a minute. Let me just get the link first here. Okay, that's the one. Okay, so questions. Okay, can you download? Yes, if you got the book, doesn't matter. Pass the book to someone else. Okay, give the book to someone else. Okay. Have you got the link for the brochure? Just type yes. Can you download it? I just want to make sure you can download it. Can you download it? Yeah, can you download it? If you can type download, just type DW. Okay. DW. You can download it. Just type DW. I want to make sure you can download that or not. Okay, can TW. Okay, the few of you doing that one. So that's the one. I hope to see all of you. So some of you in outstation, you can plan to come, and we will teach you how to use iVSAchart to read like an expert. Okay, for those of you who want to have more, and also sort of have a short gathering with us and ask some of the questions more in depth, definitely that will be the session on the 19th October. We are definitely promoting on that one, and to enable to do us a good job. So okay, if you want to register, send an email to billvermineb@gmail.com, and the number is, or you can call Dolly at 4252-4149 for the 19th October. Okay, Sunday 19th October. So I got the brochure there. And okay, so first thing I want to do is look at the iVSA chart here. Right, iVSA chart. Okay, those of you who can't get in, .com pro chart. Okay, so that's the link to remember. Make sure you put it into your bookmark. Okay, put it in your bookmark. Okay, let's look at there was a question here about Sam Darby. Okay, and then we're going to be looking at some of those charts. Can you still hear me? Okay, 8th of July, this one here. Oh, I see. That was uptrust. Okay, now in this manner, okay, what we did was very simple. Yes, it could be, but what happens is this one is both a 5-day line change and an uptrust. Okay, and remember there wasn't any confirmation in here for the uptrust. So we took that as a line change, because remember this is a mathematical model. For having said that, so it also takes a human to decipher this. This was a line change, right? Because there wasn't any selling after that until here we have a sell-off, which is here, the breaking of the 50-day moving average. Just to clarify, Mr. Wan here. Are you okay, Mr. Wan? Is that clarification clear enough? All right, good. Okay. Now we done the question about the Dow Jones, that one. So Dow Jones looking pretty bad. So you can see in here there were a couple of tests, and then we have another sell-off here. Sam Darby breaking below the 200-day moving, and we have the first one here. But all having said that, you see the bearish region in here. That's what the iVSA Pro that we're having. This red zone here is the bearish zone that we're seeing here. So this bearish zone, that tells you how this chart is going to be looking for the coming month. So wait for the green to happen before we actually do anything. All right. Okay, let's look at some of the stocks that we have for today. Those of you who have given me, there are some Singapore 1 to SGX from Alex. Let's look at GasMsia. Okay. So GasMsia, like it or not, it has turned bullish region. For start, I will always look at the bullish region in here. With the exception here, did have one, did try to, but you can see there were a lot of tests in here. Market still pretty looking very positive. At 1.4% dividend yield, this doesn't look pretty good, and also the P is a bit expensive too. So this will sort of fall under the trading more of investing. Okay, market really having problem trying to break up to the 200 moving average. Now remember, it has been trading below the 200 moving averages since then. Did a nice wash here, but there was also a good report from the analyst side saying that the potentially about the GasMsia around 365. That's about it. Okay, next stock we have is I'll be looking at will be Marco. Now, Marco pays about a 4% dividend yield, PE of 10. What do they do, Marco? What do they do? Definitely you have a reversal here. Okay, let me switch off to a 3-month. What do they do, if you are listening? Okay, you got a 2-bar reversal together with a line change in here. But more importantly, the market has turned bearish here. Okay, but still holding up above the 200 moving average. Let's see later on. Okay, what are they plastic? Oh, watch seller. Okay, watch seller. Okay, oh, I'm surprised watch seller also do well. All right, but they have a support ahead 20-day moving average. Volume did come in, but I don't think this is the end of the breakout. More congestion, it's coming in, lots of strength. We see lots of strength coming in here. Look to buy perhaps this stock. Okay. Next one we have is EngTex. Okay, EngTex. EngTex was nice. The line change, you could see there were tests here. Okay, there were tests, and then finally the market breaks up on line change. Nice one here. That tells you the market can go higher in here. Okay, you got a nice line change here, and it was sort of confirmed over here, breakout, and this one looks like it's gonna go higher. Yesterday was up about 3% in here. Do you have it? Have it? Just keep with it. All right. Okay, let's move on to next chart. Anju. Okay. Okay, Anju looking all right, although it still on the bearish indicator zone in here. All right, so we have to wait for it to turn green. Then we are looking at some positive movement like we did here. Else, it may look like it's trading below the 50-day. And although it got test, which means this is still going to be supported in here. You can put the ATR stops, this one here, and see where's the stop loss. You'll probably be out. Yeah, you're already out here. Okay, if you haven't got, if you're still in, 130 will be your stop loss. Okay, so that's how you use the Anju to manage your trades. Okay. Okay, we got Marco, Anju, Gas Malaysia. There was some who gave me, it was Sumatec. I think was we'll take one more Sumatec here. Okay, if this is Sumatec, okay, so immediately you can see it is still in a downtrend zone, trading below the 50-day moving average. Not much. It does point more to the downside. It's already turned bearish. Look for sign of strength first. Hasn't turned up yet, so it still points that the Sumatec got more weakness to come. Okay, KSSC. Okay, let's look at KSSC. That will be the last one I'll be doing. KSSC. Oh, not on the date. KS. What stock is that? Can you give me the full name? Can't find KSSC. Oh, this one. Kick Sing Hub. Yeah, I think that's a one. Nice one. This is a line change here, 72 cents. You can see it turned, the first line change was here. This was your entry point, right? And then finally you got volume coming in. That's a nice one here. This is pretty simple. Have you gone in yet? Have you took position for this one? If you have taken, this is a nice one. Have you taken position yet? You can see there was nice support in here for the last 3 months. If you go back the last 6 months, I hope you did. No, yeah, this was a nice one. Okay, see here, lots of strength. It will take some time to that before it breaks up. Okay, and you could see even if you put your ATR stops here, right? You're still holding up pretty much stable in here, right? There you go. Here you'll probably be out. Here, if you got in here, this is a nice one. Looking to break higher, but you got volume coming in now, so you can see a bit pullback. Okay. Okay, good, Linda. Thanks a lot. So that's all I have for our Friday iVSA chart clinic, and it's already been half an hour since we started. So I just recap. We'll be doing our Pro Beta user group meetings on October 2nd. So the email will be sent out to you. You know who you are. And also our 19th October, which is also a bit of our preview and our iVSA chart, how to read chart like an expert, and we will show you how to seek the next 100% return trade. All right, with that, I'll end our Friday iVSA chart, and I'll see you this evening at 4:15 for our Friday closing bell and an update how's the market's going to be. Thank you for listening. Bye bye.